Dear students, Assalamu alaikum. I hope you are fine at this moment. I am also fine. We are staying at your home because of emergency level of Bangladesh and the whole world. So you have to stay at home. But you should carry on your study in this level. So welcome to my new class for the subject of accounting. This class is for class 9, 10 and also for 11 business studies, and it is also for English version students. Today's our chapter is 6, that is the name of journal. Today's topics, that is the name of journal. This is the number 1 lecture for this chapter. Okay, are you ready to watch and listen to take my new lesson? I will discuss about the journal. At first, you have to know what is mean by journal, what is the definition of journal, or what is journal. So now I can start. Concept of journal. After the transactions occur, we have to record the detail of that as quickly as possible. The detail of the transaction is recorded first in journal primarily. Analyzing the debit and credit side of a transaction, it is written chronologically with explanation in a journal. Later on, the journal is acted as the subsidiary book for the principal book, that is ledger. Therefore, the journal is called the primary books of accounts. If transactions are kept in a journal, the chance of happening omission of errors reduces significantly. After the transaction identification of financial and non-financial events, it is necessary to record the financial transactions in the books of accounts, identifying debit and credit parties. Dear students, now I will discuss the definition of accounting. Today's topic is journal. Journal. Two senses are available in the definition of journal. In ordinary sense, journal is a book containing a record of each day's transaction. In broad sense, the book in which transactions being analyzed into debit and credit are first recorded chronologically with short explanation immediately after their occurrence is called journal. Okay, you can write in your copy the definition of journal. Two senses are available for the definition of journal. I think you have written in your copy properly. Now you can go to the second slide. Alternative name of journal. But journal is also called the which one? Journal is a book of prime entry, original entry, first entry. Another alternative name, journal is a chronological book, primary book, subsidiary book, rough book, and field book. This question is maybe in your MCQ or multiple choice questions. You will be very benefited from the alternative name of journal. Now, today's topic is journal. But what is the format of journal? See in the screen, in the following stage, specimen of journal format. You are seeing in the screen, totally 5 columns are available in journal format. Date, accounts title and explanation, ledger folio, debit taka and credit taka. Total 5 columns. I repeat again. First one, date. Second one, accounts title and explanation. Third one, ledger folio. Fourth one, debit taka. Fifth one, credit taka. Dear students, when any question to be required for preparing journal, then you can use this format. Totally 5 columns for journal. Date, accounts title and explanation, ledger folio, debit taka and credit taka. Now you can go to the next slide. Classification of journal, types of journal, subdivision of journal. At first, 2 types of journal, special journal or proper journal. Special journal, there are 6 types of journal are available. Number 1, purchase journal. Second one, sales journal. Third one, purchase return journal. Fourth one, sales return journal. Fifth one, cash receipt journal. Sixth one, cash payment journal. Another one, proper journal, that is journal proper. Rectification journal, adjusting journal, closing journal, opening journal. Proper journals format like as journal format, but special journal format it very different format. Now you have to know when these journals are used for different types of transaction. Special journal, number 1, purchase journal. When goods purchased on credit for business, then it is recorded in purchase journal. Second one, sales journal. When goods sold on credit or when goods sold on account, then it is recorded in sales journal. Third one, purchase return journal. When return outward or return to any supplier, then it is recorded to purchase return journal. Next one, sales return journal. When return from customer of goods or return inward, then it is recorded in sales return journal. Number 5, cash receipt journal. When cash or check received from any person or institution with selling goods or from any customer, then it is recorded in cash receipt journal. This is the last one for a special journal, cash payment journal. When any kind of payment in cash or by check to suppliers or buying goods or any things or property, then it is recorded in cash payment journal. Now you can go to the proper journal. First one, rectification journal. If any mistake occurs on recording transaction, it cannot be made scribble. The mistake is rectified by giving a journal entry. The entry which is given for the rectification of errors is known as rectifying journal. Second one, adjusting journal. Financial statements are prepared to determine the financial position of business. Unrecorded and unadjusted items, accrued and advanced expenses, unearned and receivable income, depreciation, reserve, due, unpaid, outstanding, closing stock, etc. that are included at preparing the financial statements is known as adjusting entries. Third one, for proper journal, closing journal. Revenue, incomes and expenses of a particular year will not affect the next year's accounts. So during the preparation of financial statement, revenue, income or revenue expenses should be closed. We have learned in accounts chapter that the balances of income denote credit while the balances of expense denote debit balance. Besides, drawings account is also closed by closing journal. The number 4, opening journal. Business institution is a continuous process. Assets, liabilities and owner's equity of the last year are brought to beginning of the next year, for which opening journal is made. Okay, dear learners, I think you have written in your copy for different types of journal. Now we can go to the example of general journal. For solving this question, you have to follow my instruction and space. Now you can take your copy for writing general journal. At first, you have to draw a format for general journal. We've seen in previous slide, totally 5 columns to be used for general journal format: date, accounts title and explanation, ledger folio, debit taka and credit taka. Okay, are you ready to write the correct answer of general journal? Now, at first, I read this question. Following transactions took place in Adib Traders as on January 2020. January 1, brought in business by owner, or invested in business by owner, or started business by owner. Cash taka 1 lakh, Almira values of taka 50,000. For the first transaction, you have to know which accounts are available in this transaction. From the chapter number 3, that is the double entry system, you have already known from this chapter how to determine the debit and credit. For the general journal solution, at first you have to determine the debit and credit and write in the current format for general journal. Okay, for the first transaction, 3 accounts are available. Number 1, cash. Second one, furniture, that is Almira. Another one, brought by owner or invested by owner. We know that when any amount or any goods or things or property brought or invested in business by owner, then it is indicated as capital. So for the first transaction, 3 accounts involved: cash account, furniture account and capital account. In this transaction, Cash and Almira, that is furniture, has increased. Cash and Almira, that is furniture, two accounts are assets. From the rules of debit and credit, we know that when asset increase, then respective asset is debit, and when capital increase, then equity increase, so capital account is credit. Now you can write the correct answer. Cash account debit for taka 1 lakh, furniture account debit taka 50,000, and capital account credit taka 1,50,000. You can see the next slide. This is the correct answer. Number 1, cash account debit, furniture account debit, capital account credit. Capital totally 1,50,000, cash 1 lakh, furniture 50,000. Now you can go to the previous slide. This is the question. January 2, paper, pen and ink purchased. 3 items are related to stationery. Always in any business, it is used for official purpose. Then paper, pen and ink, these are not account. It is indicated as stationery expenses. So in this transaction, 2 accounts are involved. Stationery expenses, another one cash account. When expense increase, then respective expense account is debit. From the rules of debit and credit, you get, so stationery expenses account is debit and cash has gone from the business for this purpose, so cash account is credit, taka 1,000. Now you can see the next slide. Stationery expenses debit, cash account credit. Now January 3, withdrawn by owner for personal use. When any amount withdrawn or drawn or withdrew or taken from business by owner, then it is indicated as drawings. That is the decreased of equity. We know the rules of debit and credit. When equity decreases, then respective equity account is debit. So drawings account is debit for this transaction, and cash has gone from the business, so cash account is credit. Now you can write the same which was seen in the previous slide. Okay, January 4, machinery purchased taka 30,000, but purchase account debited for this transaction. It's a mistake, that is error entry. When machinery purchased, then machinery account is debit, but purchase account is debited for this entry. It's a wrong entry, so purchase should be decreased and machinery should be increased. When machinery increased, then machinery account is debit, and purchase and decreased, then expense decreased, so expense account is credit. In this entry, you have to write machinery account debit, purchase account credit. Basically, it's a rectification entry. Now you can see in the next slide, machinery account debit, purchase account credit. Okay, now January 5, rent unpaid for this month. Rent unpaid. If rent paid, then rent expense debit, cash credit. But this moment, January 5, rent unpaid. So rent has to pay in future. It is a payable amount, or liability increased and liability is created. Rent, one kind of expense should be increased. When expense increased, then expense account is debit, and liability increased, then liability account is credit. Okay, for this transaction, you can write rent expense debit, rent payable account credit. In all time, when any kind of expense is unpaid or due or outstanding or payable or accrued or accrual, then you must be written in same label, expense is debit and payable credit. Now, the next one, January 6, goods purchased on credit. This entry has already discussed in the previous lessons. Goods purchased on credit. When goods purchased, then purchase account is created. Purchase, that is expense, is increased. So purchase account is debit on credit. That this amount has to pay in future. So payable is created. So you can write for this entry, purchase account is debit and accounts payable or creditors account credit. January 7, goods sold on credit. Goods sold, one kind of revenue increased. So revenue, that is sales, increased. In this entry, sales account is credit, but what is debit? On account, that is on credit. Receivable account is created for this entry, that is debtors account is created. So in this entry, you have to write accounts receivable or debtors account debit, sales account credit. January 8, return outward. That is the another name of purchase return. Purchase return to supplier, that is the payable or creditors. In this entry, liability is decreased. So accounts payable is debit or creditors is debit and return outward, that is the purchase return, is credit. January 9, return from customer, that is sales return or return in from other source. Return from customer. In this entry, account receivable is decreased, debtors is decreased and return increased, that is sales return. In this entry, you have to write sales return is debit and account receivable is credit. For this entry, January 10, commission received by check. It is very easy entry, I think, for you. Commission received by check. By check, that is the bank account increased or bank deposit amount is increased. Bank, one kind of asset. When asset increase, then the respective asset account is debit from the rules of debit and credit, you know. And commission received. What received? Commission. Commission received. In this entry, one kind of revenue. So when revenue increase, then the respective revenue account is credit. Now you can write in this entry, bank account is debit, commission revenue account credit. My dear students, I think you have understood the examples of general journal. Only 10 entries are available in this STEM, but you have to practice a lot of more and more and in several times. This class or this lesson or this lecture is for class 9, class 10, class 11 business studies students. So all of my dear students, I think you have to follow it and you have to watch and listen it in several times. If you are in shortcomings, I think you have understood for the first lecture is very easily. Thanks for being today. Allah Hafiz. Assalamu alaikum.